All right. Good morning, everyone. Welcome to our weekly estimates. We will be continuing 56th Council meeting. The many of the chartered accountant colleagues little busy in income tax. Some of them were not waked up with the council meeting minutes, updates, and everything. Most of them have been reading all the rate notifications in last 2 days. And some of you, like Hanish, have already taken couple of sessions, and we have seasoned experts also in the group. So today we would be kind of looking at the various facets, and I believe some of the suggestions which were there in the press release are not being notified yet. We have one other challenge on post-sale discounts. 22nd September is kind of a deadline on the rate change. Yesterday in the group, we have seen about a blanket discount percentage that we being floated. So in midst of all this, we will start looking at how do we look at this meetings, and when the clients or other CA friends call us, how do we address that? With this opening remarks, I welcome Raman Bhai to take over the session, and Raman, Arpit will join around 9:10.
No issue, sir. No issue, sir. So,
Yes.
so sir, we will be starting with the discussion on this circular 251, which is on post-sale discount. Yeah.
Yeah.
Yeah. Okay. Okay, sir. Okay.
Okay.
So, the circular is, I mean, a very welcome step in clarifying some of the important point, but in one or two aspect it touched on the bullseye, but in one or other point I think it has also created some confusion where what they really want to say is not clear in us. So let me just open that circular, and thereafter we can start discussing on it. The very first point was in the circular itself is whether on post-sale discount given in the form of financial and commercial credit note will be for that, whether there will be a reversal required for commercial credit note, and clearly that in that case, because the liability is not affected by that, and therefore there will be no requirement of reversing any credit on it. So I don't think any discussion, much discussion, any point on this, any confusion on this, any issues which is yet not clear. Anybody?
I don't know
if you
department would argue and agree with this point.
Yeah.
They would continue to still say either you have failed to make the complete payment to the your supplier.
Yes.
And you are enjoying the benefit of 100 rupees credit while your liability is only 80 rupees.
On the Venuji, I support your view, but on the contrary, I would be seeing it in that favor also, that whenever we used to challenge proviso to section 16(2), saying that me and my dealer had a contract of paying this thing in let's say in 6 months or more than 180 days. I mean, in this, if you see the language when it is drafted, it is respecting something which is in between their agreement only. And
Yes.
In between their agreement only. And I would take this point from this circular language and say that since it is respecting that, I have not failed, I have paid a kind of consideration in the form of commercial credit note, and that is why ITC is not required reverse. Similarly, if I am paying after 180 days, it is between us, there is an agreement, there is a treatment between us, and I can very much, I have not failed to make payment, and I can take full ITC, continue to avail ITC. Yes, Nilesh bhai.
The issue will arise if I have not made payment within 180 days and I have not yet received credit note. Since I have not made payment within 180 days, I have reversed the ITC. Assuming that has been as per agreement, I should make payment within 3 months or whatever it may be. And there subsequently I received a commercial credit note. How do I restore the credit? There will be any challenge on restoring the credit?
I think Nilesh, in previous circulars also they have clarified that even book entries is a valid mode of payment of consideration. Now that if commercial credit note has been issued, it could be very much treated as a payment, kind of that payment has been done.
I agree, Ramandeep. Even I am of the same view.
So, in fact, if the point number one, I felt that it is again respecting something between their agreement only, and between them they can decide it, and they can, for that, since original value remains the same, it says no reversal or no ITC reversal would trigger in the first part. So, anything to touch upon in this? Any point we are missing in the first
Anyone
question?
We may continue.
Yes, sir. Yes. So, the second question, which is answered in this circular, is whether a post-sale discount offered by a manufacturer to its distributor, would be treated as a consideration paid by the manufacturer for the dealer's supply of the sale goods to the end customer as a monetary value of the inducement to the supply of goods manufactured by him to the end customer. So it is a kind of a transaction where they are saying that there is a back-to-back kind of an arrangement where a manufacturer gives certain discount to a dealer and dealer gives certain that discount to the customer. But what the clarification says that the subsection 31 of section 2 defines the consideration, and it includes the monetary value of an act of an inducement of a supply of goods or services, whether by a recipient or by any other person. Then it gives a reason that since there is no agreement, no agreement between manufacturer and the end customer, these are two independent sale transactions from manufacturer to the dealer, and the second limb is to dealer to the end customer. The essence of the matter is that contract of sale, and since there is no contractual liability, there is no relationship in between. It's a principal to principal transaction between manufacturer to dealer. The discounts simply are given for giving a competitive push to sale and merely reduce the sale price of the good, are not linked with any activity. It is clarified that discount cannot be included in the consideration. So it says because there is no agreement, it is a kind of a general discount and it will not be included. Let me finish this third point and then we'll come to the discussion. The third, then it says when it will be taxable. It says when manufacturer have some agreement with the end customer at a discounted price, then manufacturer may issue commercial or credit note to dealer, enabling such dealer to provide goods at agreed discounted rate to the end customer. Therefore, it is clarified that post-sale discount given by the manufacturer to dealer would be included in the overall consideration, and as it is an inducement toward the supply of goods by a dealer to the end customer. So let me just give you an example to understand. Let's say a hotel project owner went to dealer that give me a plywood supply, and the dealer said I will charge rupees 100. Then this hotel project owner went to manufacturer that I want so much bulk quantity, give me at give me discount. Then manufacturer says that okay, we'll give you at 90 rupees, but you have to take delivery from the dealer itself. Then the dealer billed this to the project owner at rupees 90, and the manufacturer of the plywood gave rupees 10 rupees as a commercial credit note to the dealer. When it says when there is a specific agreement between all, including all these three parties, then only this will be considered as a consideration. But when there is no specific agreement with the last end customer, it is just an arrangement between dealer and manufacturer, then it will not be added. So, what are your views and what are the issues you are seeing here?
So Ramanji, now
Yes, sir.
we will have these situations where,
Yes,
like
sir.
now, iPhone 17 is launched,
Yes, yes,
right? And
yes,
I would want to keep iPhone 16 and iPhone 15 and 14. I want to return back to the distributor or the manufacturer.
correct,
Now they would
correct.
also do nothing with the stock. They would say that okay, you give 10,000 rupees, 20,000 rupees discount to your customer. After you produce your sales invoice, I would reimburse you that. There is no agreement with the end customer. There's an
Correct,
agreement
correct.
directly with the manufacturer and the retailer.
Right. Even in this
Absolutely. I would say that it is taxable as a supply, even though there is no agreement with the end customer.
That is one important question, sir. You are saying that even if there is no specific agreement, because circular has said that only when all three are at the party to the agreement, then only it will trigger up. But you are saying that even if it is a conditional type of contract, when no specific end customer is identified, still it will be covered into that. Any view on this? Anybody?
Venuji,
Yes, sir, Bhai.
Hari, Venuji,
Yes.
the question which you have raised, there are two decisions which I would like to share because those two decisions are somewhere down the line are the guiding principle for issuance of this circular, what I see, and somewhere down the line the part which is there, which pertains to the fact that where the agreement is between the manufacturer and the customer, then it becomes part of the sale value. Let's allow me to share two decisions which are there. I think which might be relevant for understanding of this circular also.
These discussions were
This is-
discussed by Rahul ji about 4-5 months back. I think one was Madhya Pradesh High Court, pre-GST.
No. No, not CGST. One is these are two pre-GST regime judgments.
Yeah, that's what I said, pre-GST.
One is Southern Motors versus State of Karnataka, wherein Honorable Apex Court, while discussing this issue, that what are the nature of trade discounts. They said that a trade discount conceptually in para 28, a trade discount conceptually the pre-sale concurrence, the quantification whereof depends on many factors in commerce regulating the scale of sale or purchase depending amongst others on goodwill, quality, marketable skills, discounts, contributing to the ultimate performance to qualify for such discounts. That means the quantification of the trade discount might be on anything. It might be on sale, it might be on goodwill, it might be on staff, it might be on anything. And second part is the second decision, which is Deputy Commissioner of Sales Tax versus Motor Industry Company, wherein a discount was given by the seller to the purchaser, and it is a sales tax regime judgment. So in that case, the seller issued a credit note. The department disallowed that credit note, treating this as part of a service discount, which is not related to sale, and said that this is an overriding commission incentive to promote trade. And in that case, what the court said,
Right. In the instant case, the service said to have been rendered by the buyers for securing the service discount is an integral part of the transaction or sale itself, which incidentally confers on the assessee the benefit of popularization of the assessee goods in the market. The discount so allowed is merely a percentage of the price of goods sold, which has nothing to do with any other goods supplied or other services rendered by the buyers to the assessee. The fact that discount is not allowed at the time of sale, but on later date at the end of month would not make it any less a trade discount. So ultimately, what is the concept which I think is for discount is that whenever an amount is being given by the seller to the purchaser, it is nothing but a part of the reimbursement of the purchase price. And once it is a part of the reimbursement of the purchase price, then whatever may be the quantification, however may be the mode of giving, it still retains a part of the discount and it cannot become a part of a separate supply being treated as part of the sale price for the purpose of supply. So this is
Harpreet,
one background. I was a bit late in joining. I thought it to share it at the start only.
can you just take up Rita Sales Corporation judgment also?
I'm not having that judgment.
You only shared in the group. I have tagged it in our WhatsApp group right now.
Abdul, you can make Uni also co-host.
Because
Again,
I'm in the mobile screen. I don't know how to share the screen.
again, if you look at the view they are sharing in the practical world also, if we see how this transaction usually takes place, is like that end customer went to manufacturer and manufacturer says that you will get this commodity from the dealer itself, but the price, okay, I'll instruct him that they will offer you this price only. So the
This
ultimate,
sorry, sir. Continue.
sir, please go ahead, sir. Please go ahead.
No, basically, I think this circular directly hits centralized procuring rate contracts where a manufacturer and a large retailer will have a centralized purchasing rate, and any distributor
Yes.
will have to sell it at that rate across the geography. And they will be making claims subsequent to the sale based on the quantity that is sold, which the manufacturer cross checks with the actual retailer or the customer and then passes on the credit note. For example, if I've seen it in FMCG, the hospitality sector where Tropicana has a centralized rate purchase contract with almost all the hotels in India. So the hotels anywhere will have a dealer in their locality who will be having Tropicana stock, and that Tropicana will be sold at a price of so and so per Tetra Pak. But that will be much lower than the landed cost that the distributor otherwise gets. And now after that they've made the sales to that particular hotel unit, once they make a claim to the manufacturer PepsiCo, PepsiCo will confirm with the hotel unit and reimburse through the credit note mechanism what was the difference based on the centralized purchase rate contract. This, I believe, will get hit by Circular 251.
But Uni, tell me how many of the deals that happen in the country should be direct discussion with the manufacturer?
Huge amount. Huge.
Venuji, these types of discussion normally happens in automobile market also, wherein a bulk deal is executed supposedly between the military department and the car manufacturer, and the cars are sourced or routed through the dealer, local dealer.
This is, I'm saying, value-wise.
RPG, one more thing. Brother, we are from Ahmedabad. Similar to automobile, which RPG said, there is also deal in the automobile for paints and oil, engine oil, which is done centrally by the OE with the outlet, with the dealer. The distributor just supplies it.
I agree regarding oil. In fact, this first issue came about in an advanced ruling in Kerala, Santosh Distributors, where Castrol was a question. Castrol asked the persons to sell lower at cost because they have rate contracts with certain customers of Castrol. And now these guys get additional credit notes, which they ask the department whether forms part of value. And that was a advanced ruling that set off the discussions, which led to Circular 107 and all those problems.
Again,
yes,
sir. Again, if we even consider that this kind of rate contract, centralized rate contract, usually take place even then, can it not be said that it is nothing but again a post discount sale which is being forwarded by a manufacturer to the dealer itself? I mean, how, considering the decisions you already shared, that these are nothing but a kind of a post-sale discount which has been shared by the manufacturer to the
Yes.
dealer itself. And it is very much covered in the first point itself that there will be no requirement of reversal. It is, they themselves have mentioned, it is nothing but to boost their sales only. In the first para, thatself they have mentioned. Just because there is a third three-party agreement of rate contract, it cannot be considered as an inducement to a supply, is what I feel, sir.
Yes, Aminji ji, that is one point also, that however may the quantification may be there, but ultimately it's a reimbursement of the purchase price which was paid by the purchaser to the seller. Initially, which was paid by the purchase seller, and subsequently it is being reimbursed now by the seller to the purchaser.
Yes, yes.
So if we try to go one by one and have the views of all the members on a situation to situation basis. So let's take first example, that what Venuji had said, that supposedly there is a car of 5 lakh rupees which has been sold by Maruti to its dealer. Now, in the month of Diwali, Maruti comes up with a scheme wherein they said that let's you sell the car at 4,80,000. There's a difference of 20,000, wherein 5,000 is to be borne by the dealer and 15,000 would be reimbursed by the company to the dealer. Now, what happens to that 15,000? This 15,000 initially in the circular for June 2019 was held as a taxable supply by the dealer to the to Maruti, original equipment manufacturer. So now what happens? What is the view of the house for this taxability of this 15,000?
Not taxable.
Not taxable, sir.
I have a slightly different view on
I
this.
say it is taxable.
So my view is that it is a taxable, but it is will be taxable as a sale of car and supply of car, and the 15,000 which I am getting additionally has to be treated as additional consideration flowing for the supply. So it should be taxed at that end, not at a Maruti end.
That is the point always. We are not talking about an invoice to Maruti. The original value to the customer, whether it forms additional part of consideration, is the question.
So it will be form part of the consideration. No, sir?
No,
So
no. That is why this circular creates a distinction where there is no rate which specifically agreed upon by the final customer and Maruti.
Only let me share the agenda for 37 GST Council meeting.
No. 37th the GST Council meeting and this circular has slight differences.
No. I am not sharing the agenda, but relevant
That
part of the
manufacturer of motor vehicle example that was there. Yes.
No, I am just sharing the discussion, the detailing of the definition of consideration, that how they see consideration therein. Let me allow to share that part.
So go ahead, sir.
Yes.
No, if Venus's view is taken, we have to apply for a provisional assessment whenever we are expecting future credit notes, get a value at the provisional assessment basis and then move forward. Otherwise, it will be tricky.
Unni, see,
Yes.
I am not talking about uncertain amount. There is a certain amount. Like the dealer is expecting X value from the manufacturer. It is a known quantum. So for a known quantum, you cannot say that it is not taxable.
Venuji, 5.2 of agenda 37 GST Council meeting agenda, wherein they have discussed that what is meant by consideration, because once it is a part of consideration, only then it becomes a part of value of supply. So
Right.
what they said, that the underlying principle of clarification in para 4 of 28/6/2019 appears to be that reimbursement or payment for supplies of goods or services for anyone other than the customer is still part of the consideration or supply to the customer in view of definition of consideration in section 2 subsection 31. Now the issue in dispute is whether any other person, because the definition of consideration says that it has to be paid by either by the recipient or by any other person. This is the definition, and the definition. So the section 2 clause 31 says that a consideration has to be paid either by the recipient or any other person. Now, if the car is being sold to the customer, so the recipient is not paying that 15,000 rupees. Now, the question is whether Maruti, when it reimburses 15,000 rupees, whether it becomes part of the consideration being paid by any other person. Now, what the circular said, now the issue in dispute is whether any other person includes a person in the original supply chain also, that is the principal supplier in this example, or does it mean any other person not connected with the supply chain? For example, if a real estate developer issues a voucher to every home buyer, which is redeemable at car dealership 50,000 rupees discount in value of car, when there is no doubt that the car is being supplied at 5,50,000 only, the customer is paying only 5 lakh and 50,000 is being paid by any other person. In this scenario, tax sale value shall be 550 only. However, when the principal supplier issues a credit note to a dealer, such supply is in effect reducing the value of supply received by the dealer, though without any tax adjustment in view of restriction of 15(3)(b. It appears that clarification dated 28/6/2019 deeming such a discount also as consideration for final consumption without allowing any tax adjustment for primary supply needs to be revised. And that this is the precise reason that 28/6/19 circular was withdrawn, because the amount which is being paid by the principal manufacturer to the dealer is not part of the consideration, because the principal manufacturer does not fall within the ambit of any other person.
One point here, if we look at this particular case only, where in the Diwali season, if I am offering certain discount and I am getting paid for that
Ravindra,
particular
your voice is
amount,
breaking.
can we
Your voice
not
is
say
breaking.
that? Okay, sir. Okay, sir. Okay. Okay. Is it
Now
better now,
you
sir?
can say. Now it's clear.
Yeah. Yeah. Sir, even if we look at this transaction also, in para 3 of this circular only, it says that even if a post sale discount is allowed to boost sale, for doing any promotional activity, he may do promotional activity, then it will not be treated as a consideration for a separate transaction. So if I am saying that I am allowing some discount for boosting certain activity, boosting certain sale, then they themselves are mentioning that it will not be treated as a separate transaction for a supply of services. And in the para 3 itself of the circular, so giving a special discount on special occasion itself will get covered in this particular para entry, and it will not be treated as a separate consideration.
Ramandeep ji, the issues are, I think you're saying that whether it will be a separate service. So issue is not whether it is a separate service. The point being raised here is whether it is a value part of the consideration received for the transaction of that sale of that car itself. And that is the point.
It will not
which
be
Arpit
treated as a
sir,
part of
which
it.
Arpit-
It will not be.
It will not be treated as part of a consideration. That would be my view also. And yeah, the basic reason underlying in is just what you were saying, that it is for a particular occasion or any reason. There could be any reason, not necessarily Diwali, but sticking to the example, they wish to push sales in Diwali, so they are lowering it. They're giving those discounts. Just Arpit, by just one thing, when you say that the car manufacturer is not any other person. So any other person here is regarding the sale transaction which happens between the car dealer and the car buyer. The any other person has to be. So in that sense, the car manufacturer is an any other person. So that would not be the distinguishing factor. The distinguishing factor would be that it is just a discount given to lower the values, the cost for that dealer, so that the sales can be increased. That would be my view.
Guruji, that is what was said, that when a car is being sold by the dealer to the person, then in such case the consideration for the selling of the car would be when it is being paid by a recipient or by any other person. Now, when the car manufacturer is reimbursing some amount to the car dealer, whether that amount is towards the amount being paid by any other person for the sale of the car, or whether it is for on account of the earlier transaction which took place between the car seller and the car dealer.
Now, can I ask one more question here? can we add another dimension to it? Can we see these two transactions as the where the distinguishing factor is that there is a choice or compulsion? So in the case where the circular treats it as consideration, there is a compulsion on the dealer to sell it at a lower rate because of a pre-existing contract, where in the earlier case there is no compulsion which is legally enforceable, and he has to simply do it at a lower rate because there is a existence of a agreement or a post supply discount that is going to come from the manufacturer to him. Whereas in the other case, he cannot do so even if he does not wish it, because he has to commit to the manufacturer's contract with the customer.
But the original manufacturer is not at all involved in this contract between the distributor and the buyer, right? There's no
That is for the
treaty of
first case.
contract.
That is for the first case. And in the second case, the original manufacturer has a contract with the buyer.
Okay.
To second Unis's thought, it is as a part of condition to the contract only. As Sir rightly pointed out, when the the dealer is giving discount, to enable him to pass on the discount, a condition is placed as a part of the contract of sale, where the manufacturer is going to give the discount to the dealer. It cannot be treated as an inducement. It's a condition to the contract as opposed to consideration to the contract. And the second point is that any discount that is transacted in a bargain inheres the existence of an agreement, as opposed to having an express or an inherent agreement of discount between the parties. So to that, on these two counts, I feel the form of the contract, or probably the contract law principles, have not been properly brought out in the circular is what I am just foxed by this circular, honestly. How can a circular say there is no agreement between a manufacturer and customer when every discount transacted in a bargain inheres an existence of an agreement?
Ashwin, I also felt the very same when while reading this circular. Are they treating it only when there is an explicit written agreement? Then only it will be considered as an agreement only. They are, I mean, completely ignoring the concept of Contract Act. You rightly mentioned.
Yes, Raman.
Sir, I think even if there is a specific obligation to pass on the benefit, I think the essential part of this contract is only the essential part which I am getting from manufacturer is nothing but a discount only, and only with the condition that I have to pass on the discount only. I mean, it's just a reduction of my purchase value only, and on that basis, I feel that it should not be treated as a consideration in that case also, even if it is sold to in the reduced price to the end customer, even when there is a centralized agreement.
Ramandeep ji, let's go one step ahead and assume that this is a additional consideration in the hands of the distributor for supply made by him to the customer. Now let's take that same car example.
Yes.
5 lakh rupees is the value of the car, and the manufacturer has promised the end customer that he will pay 50,000 rupees as a discount because it's a bulk booking, which say TVS employees are doing.
Correct.
Okay. So now the dealer knows what is the value of discount he's going to get from the manufacturer. But based on this circular, he will have to raise an invoice of 5,50,000, considering 50,000 as the additional consideration. Discharge GST on the same. Now 50,000 the end customer will not pay. But because of all this, he will end up paying GST on the additional 50,000 rupees. Okay, now let's move to the Tropicana example which Unni sir gave. Assuming Tropicana is sold at 10 rupees, but because of this circular, it is now for mathematical simplicity is being sold at 10 rupees plus 5 rupees, which PepsiCo is reimbursing 15 rupees. If the hotel is entitled to claim the input tax credit, the distributor is required to sell this Tropicana at 10 rupees, which the customer is paying, plus 5 rupees, which the manufacturer is reimbursing, 15 rupees. plus 80, say 30%, 40% GST on the same. But end of the day, the customer is only paying 10 rupees. So under Rule 37, who will claim the credit? How much will be accounted? Whether I have to raise two separate invoices or whether invoice will be one because supply is only one. Those are the issues also which will come up because of this circular.
Rightly mentioned, sir, Anishji, but that if it is treated as a part of consideration, then the complete invoice will be billed to the customer, but he will be end up paying only that relevant portion, and some portion will come up from the manufacturer. And how the credit, he will take the full credit of it.
Sir, as far as credit is concerned, I don't think there should be any issues, sir, because the invoice would look like, let's say, 10 rupees is the sale price, sir, and then the inner column it would be value of supply 15 rupees, GST upon 15 rupees, and that tax would be collected from the customer. So it would be 10 rupees plus tax on 15 rupees to be collected from the customer, and that would be the total amount, which is the invoice value, which is going to be collected from the customer. And customer would be paying that 10 rupees plus GST on 15 rupees, and he should be in a position to take the credit of that GST paid on 15 rupees. And even in Rule 37, like how we have an exception that Schedule 1 supplies there's no requirement to pay within 180 days. Similarly, where obligation of the supplier is met by the recipient, there's an exclusion over there also. So in that case also he is in a position to take credit. So maybe something from there he would be in a position to take credit of that.
Just only one point I want to add. Rule 37(1) says value of supply and not value of invoice.
Yes, yes.
So it is a fight. It's not a straight jacket case.
Yes. Just like a special transaction where value is treated separately calculated and the transaction is separately valued. In the similar way, it would be go ahead, right, Praveerji? Yes.
Now, also there were two examples. One is where the sale is being made to an employee of the company. There today he was paying tax only on 10 lakh rupees, which is the price agreed with the company, and GST was being discharged only on the 10 lakh. Now the value will become 15 lakhs. GST will have to be discharged on that 15 lakh rupees. Then you will get a 5 lakh rupees discount, but the end customer ends up paying 10 lakh for the car and GST on 15 lakhs. So the price of the car increases. Also, now because the price of the car is 15 lakh plus GST, the insurance of the car also will increase for the employee.
True, sir. True.
In my view, it is not necessary that the GST on the additional value has to be paid by the customer. If they say TVS is saying that if when it is given to the employees, the GST would be borne by them, they can pay the GST. Customer can. It will be depending on the what kind of the scheme is there, what is there. It may or may not happen. It is not necessary that the GST is always to be paid by the customer. We have to distinguish between when we say we always. I've mentioned it earlier also in some other discussions where that the invoice value and taxable value can be different. Then we go on to that, how does it match? Does the system allow it? Will we be able to match it in accounting? Yes, everything can be done. So taxable value will increase to 15 lakhs rupees. Invoice value can remain 10 lakh plus GST. So now the credit note which is given by the principal manufacturer, is it only for 5 lakh or is it only for 5 lakh or plus GST? If the manufacturer says no, I'll give it only for 5 lakhs, not the GST component, or can it be 5 lakh, the inherent GST in between that, like we do it for inclusive kind of transaction? So all those things, or the GST can be only by the customer only. Then it will be like this, like say, as a student, sometimes a friend's father was influential. We used to get passes to go to see the movies. So what the movies all will do, they will not charge us any ticket price, that they'll just ask us to pay only the entertainment tax. So in that manner, yes, customer may be asked to pay additional GST, but if the additional GST is to be borne by the dealer or the principal manufacturer, that may be the terms of contract or agreement or whatever their arrangement is, not necessarily a written contract. It can be any sort of an arrangement. But sir,
Say
then
if
Right.
that
So
there is
the
an
point.
iPhone which is iPhone 17 is say 1,25,000. I am a dealer. My dear friend Venu sir comes there. I offer that iPhone to him at 50,000 rupees. So what should be the taxable value? It has to be 1,25,000. It can't be just a transaction value if we go by the rules. I'll have to pay GST on 1,25,000. Either what arrangement I have with Venuji is either I ask him I'll bill this, but you please pay GST on 1,25,000, or being just a dear friend, I'm billing him on 50,000 plus the GST and even the GST on the additional 75,000 I am bearing because of my friendship with him. But as far as the taxable value, that has to be 1,25,000 and GST on that only. When we come to those arrangements, it can be any kind of arrangement. We can't say it in a straight jacket manner only. Yes, that will have to be borne by the customer or it has to be borne by this only.
But sir, here one point is there. If this additional GST is again to be paid by the car manufacturer, say in the example, then that additional thing may also be come into the ambit of additional consideration.
No, sir.
That is a
That is again
consideration.
how the accounting, if it is the accounting is done as it is done as that this is the additional value and the GST is also being paid. So that will remain that will not become again a taxable. GST cannot become a taxable part of the value again. The GST paid by the manufacturer that can't become the part of the value again. The invoice which has been raised, say a simple accounting, if I am a dealer, I'm raising an invoice for 10 lakh plus say 40%, let us say for auto vehicle or maybe 18% on that, and the taxable value is 15 lakh. So GST on that, whatever, if we say 20% for mathematical convenience, it becomes 3 lakh. So from I'm debiting my customer for whom I'm given 10 lakh plus 2 lakh. And I'm debiting in my books of accounts the manufacturer for the difference 5 lakhs plus the GST which I have to recover from him, and he gives that. It is just a manner of accounting that this amount is being recovered from that person. So that manufacturer will become a debtor for me. He will issue a credit note for that amount to me.
Sir,
It is not a GST credit note. It is just a financial credit note as a manner of payment. Yes, sir. Yes, sir.
Sir, for example, assuming let's say that the transaction, the considering this circular, that tax has to be paid on that value which has to be borne by the manufacturer also. Is it not indirectly we are diluting the provisions of Rule 20, which is there in Rule 28, where we're saying that when full ITC is available, the transaction value declared on the invoice can be considered as an original invoice and there will be no challenge like revenue neutrality and everything. Is it not indirectly stepping into that shoes and where we are forcing them to charge higher GST and forcing them to create an additional taxation liability? Any views on this?
But Rule 28 is only for related parties.
Yes, madam. Yes, you're right. That is what I'm saying. The principle which is there in this rule itself, where it says that when the full ITC is available, even in case of unrelated parties transaction, then there will be no questions of valuation itself. So are we not overriding these principles by?
Yeah, I agree with Ramandeep. I'll take the classic example of iPhone that was being discussed. So right now iPhone 17 is being launched. Many of the people will have long back unsold stock of say iPhone 14. So the value of this commodity has actually depleted over time. So now when you are selling this product at a loss and the customer enters into an agreement to get it from Apple at a lower rate because of some voucher, and ultimately it is sold at say 50,000 rupees. Now, the actual economic transaction that this supply has generated and this product for which it is actually being worth, which is supposed to be taxed, is only 50,000. To say that some book adjustment is going to be added to the value will be inflating the value of this consumption tax.
Yes, that is what I feel, sir, that we are artificially, by way of overriding something which is specifically mentioned in the act and provision itself, by way of this circular, we are increasing that. Yes, Venu sir.
See, the value for the end customer is 50,000. I agree, and we are at a consumption-based tax, but the liability is on the supplier. Now, should we look at from the position of the supplier, or should we look at from the position of the recipient? Because the supplier is liable whether or not he has collected the tax or money from the recipient. So the position of the law should be looked. Though the economic value of the phone is 50,000, I would say taxation value of the phone is 60,000.
And sir, another point to add over here is here we go to valuation rules when it is 15.4. Now in 15.1 it speaks about GST on transaction value. Now for this particular transaction, the transaction value is consideration received from two persons. One is from the recipient and one is from the supplier. So it would still fall into the term transaction values. And second thing is the circular points out that this discount would not be regarded as a consideration only when the transaction is on a principal to principal basis. Now, if the manufacturer is giving the discount to the distributor and the distributor is compelled to pass on that discount to the customer, can it be said that this is a transaction on a principal to principal basis?
Let's try to have two distinct transactions, and let's try to understand that what is the distinct feature between two transactions. Supposedly X is there who has no control over Y, and he just asks Y to sell it to Z, and X would give 10,000 to Y, and Y will receive additional 40,000 from Z. So Y would receive 50,000 rupees, wherein X, Y, Z are three independent parties, and Y has not given any authority to X to enter into an agreement with Z on his behalf or for any stock which is lying with Y. In the case of a car manufacturer, where he enters with a third person for a goods lying at the premises of Y, that means that in a capacity wherein he is entering into on behalf of Y for the goods lying at Y to sell it to Z, he is only reimbursing what is being paid to him by Y, not what is being received additionally by Y on account of sale to Z.
Agree, sir. It is nothing but a discount only, which I paid, I am receiving back.
Yes, and we have to understand that these are two different transactions, wherein in the first transaction, X did not have authority to transact or enter into agreement and instruct Y to sell that at a particular price. He can only say, and if Y agrees, then the transaction would happen. But in this case, Y, wherein a car manufacturer enters into a third party, there is a binding precedent on Y or a car dealer to sell to Z. That means Y would only sell when X would reimburse him that price, what he has paid earlier, because X is entering on his behalf with Z to sell it at a lesser price.
And RPG, in your example, invoice cannot be issued by Y to X because there is no underlying supply.
Yes.
Or even debit note for that matter.
Yes, and let's take another example. What happens in Rajasthan and might be happening at other places also. There is a liquor manufacturing company, and there is a dealer who sells liquor. The liquor manufacturing company asks the dealer to supply his liquor to a 5-star hotel. Now, the dealer who sells the liquor to a 5-star hotel, the liquor manufacturing company gives certain incentive or commission or kickback, what we can say in terms of this circular. Now, what would happen to that?
That is being treated as sponsorship services because they can't promote liquor due to other regulations.
Now, Unity, there is a pre-existing agreement. Supposedly, now what would happen to this? Because now liquor is something which is outside the purview of GST.
Sir, can we, for this point, can we see the table, point number 3 also of this circular, which is similar kind of worded as sales promotion activity or boost activity? It says when a specific task has to be done, sales promotion activity has to be done. In that case, when I have to, the circular para 3 says that if some specific activity has to be done, and for that it is receiving some reimbursement, then it will be a kind of a taxable activity. And when just some post discount has been given to boost sale, then it will not be considered as an additional consideration. It will not be added in the value part. It's just a discount only, it says. Sir, you can zoom in a little bit. Arpitji. Yes. If you note, sir, here word, he says that they may engage in promotional activities to boost sale. So it's a discount and they may engage. They may do or they may not do, but this is done to boost the sale only. Promotional activities they can do. In that case, if that kind of discount is being offered by the manufacturer to the dealer, then it is not a case of a reversal, or there is no separate consideration. Not a consideration for a transaction, but it's in second para, it says that when there is some specific sales promotion activity need to be done, like for example, co-branding, special sales drive, exhibitions, arrangement, customer support services, then such services are explicitly stated in the agreement, then it will be considered as a consideration for that supply only. Now that liquor examples can be, I mean, related here,
Yes, sir.
can be correlated. Yes.
Yeah, Ramandevji, explicitly stated along with the specified consideration.
Yes.
That is also mentioned. It is just not
Yes.
explicitly stated along with the defined consideration. Arpiji, if you can just scroll down a little bit on the second para where this particular sentence is there. Yeah.
Yes.
With a clearly defined consideration for such a supply. So both the limbs have to be satisfied here.
Okay. So,
Sir,
sir,
and
just
my
one.
only point, sir, that when the distributor has purchased at a higher cost from the original manufacturer at an earlier point and paid tax on the entire amount, now when any discount is given, it just goes to reduce the purchase price when he has already discharged tax on the original value. I mean, why should we pay tax on the credit note or the discount that is extended, unless there is any other service that has been rendered?
That is the point that is being made, because in many cases, they are also asked to do sales promotion activities.
What about this coins they are giving, gold coins?
That is gift.
No, Uniji, that is a very valid point, because see, most of the schemes are in case of a car dealer manufacturer. So we always come back to them. There's an exchange bonus, there's a loyalty bonus, there's a gold coin scheme which they give at the time of festivals. Now, what happens to those, whether that exchange bonus or the loyalty bonus, whether that would be treated as a sales promotion activity linked with the consideration payable? Because now this is something wherein on satisfaction of particular condition, that discount is being given, not only on a mere purchase of the vehicle. So I'm not saying it would be taxable, but this is another area which has to be seen from the perspective of this circular and what happens to those discounts, wherein a particular condition is there to be satisfied for getting that discount from the perspective of the customer.
Right.
And Arpit sir, in social media, it is going on that the Heavy Industries Ministry has requested or say directed the car manufacturers to display PM's photograph also. So that is a specific activity being taken by car dealers. So is that But there the second limb fails that there is not a clearly
Consideration is
defined
not mentioned, sir.
consideration is not mentioned, so it will not fall. If we look at just at the first part, then it may happen that that is also a promotional activity being undertaken.
No, practically,
that promotion activity is not coming with a consideration. It is coming with a condition.
see, practically this issue has been litigated ever since that circular was withdrawn. Because even though there was a the withdrawal of the original 105 divided by 112, department said since board has yet to clarify, we will keep every case pending. So adjudication as well as first appeals were randomly confirming that even where there is no explicit consideration, whatever you get was indirectly a form of consideration for these activities, without which, even though you are on a principal to principal basis, these are especially giving value to their manufacturer. So every case where there was some credit note is getting taxed. Only few cases are there where they've accepted that there is no specific consideration. And what are the facts will ultimately have to be distinguished on a case by case basis. We cannot take the circular as a one stop solution for all kinds of sectors. It could be different for automobile, it could be different for white goods, it could be different for pharma, it could be different for goods where advertisement is prohibited. For example, if you look at tobacco and tobacco related products, the COTPA Act prevents any form of indirect or direct advertisement for cigarettes. So what they do is they camouflage the actual transaction of advertisement through other means for which they are issuing credit notes, which is well known in the market. For example, if I go to a shop, they will ask the vendor to arrange cigarette stacks at the front of the shop where the check-in or the pricing or the billing happens. And for that, if they do their stacks there, they will be given an additional credit note through a financial discount. So whether that will also be treated as a sales promotion activity have to be considered.
Unidhi, I have shown what the draft circular which was shared in the 37 GST Council meeting, and which was not accepted, and then the matter was referred back to the law committee for further discussion. And therein, this specific issue was dealt with the undertaking special sales drive, advertisement campaign or exhibition, and they have also discussed about the exchange bonus and the loyalty bonus. So we would not be discussing this today because it's already 9:57. But I think that we can conclude this discussion on discounts and incentives and taxability in the next session. And if this circular can also be seen in the perspective of the current circular, draft circular, which was subsequently withdrawn in the current circular, and then we can come to a conclusion that what would be treated as a separate activity or a promotional campaign with a consideration. Because again, this circular has left many things which are unanswered, and added one more complication to it with a pre-existing separate contract between a manufacturer and the customer.
Rightly, sir, rightly. Certainly. In the third in third para, sir, where they have highlighted where he may take some promotional activities, or in the second limb they say that when there is a specific mention of the activity along with the consideration, in that case, if let's say, sir, one manufacturer pass on a general amount saying that for an advertising budget, for sales promotion budget, you may do outdoor or TV or whatever they have mentioned in that. They have specified how they have to spend. They have not categorically mentioned for what services they have to do. They have given a budget that for 10 lakh, there is a free hand, you can do some advertisement or promotional activity. So in that case, they are saying when you have specifically mentioned those activities to be done, it will be considered as a service for that consideration. And when they say that they may they may not specify anything, they just randomly give post-sale discount, it will be considered as a discount.
Sir, and one last point I want to make is, as per section 15, transaction value is the price paid or payable. And we cannot have any additional amount of discount being added to the invoice value, because if it were that price, the customer wouldn't even buy the product.
Yes, yes. So any words? Unni
Ma'am,
sir, Unni sir, Arpit sir, yes sir.
So
Venuji,
Arpit
it's
sir has
already
already
10.
shared. Arpit sir has already shared pre-GST judgments also. So this issue was litigated even before GST. So that will not stop even after this circular. But I think some clarity or some cases can be, which may not turn out to be litigative, as Uniji was saying that almost every transaction of a financial credit note is being by the department. They are saying that there's a GST has to be paid on it. This may provide some relief, but yet certainly this issue will keep on remaining on the parts which they have said it has to be treated as a consideration, or in the third point as a separate supply of services. So like Unni ji was saying that it has to be considered on a fact-to-fact basis and a case-to-case basis, what are the facts, etc. It will remain like that.
Venuji,
In the next scenario, can we just have a comparison of the 37th council, the original 105, the present circular back to back, or on a comparison table with examples? Otherwise, it's very tough to get the point really down. That's because we need to have the three circular side by side comparison. The original one, the which was withdrawn, the draft which is existing only in the agenda, and the final one which came out.
yes, that we will do so that we can have a structured discussion.
Arpit sir, this point number 2, where they are saying that the activities undertaking as advertising, campaign, co-branding. Here, I think these activities are to be taxed. The value of these activities, they are nothing to do with the consideration, sir.
Yes, yes. Only these activities have to be taxed.
These activities, they are bound to be supply only because he is acting on behalf of the manufacturer. He's doing advertisement, and then he will be claiming it by raising a bill. I think there should not be any problem in this. I think.
Ultimately, sir, what is the scope of these activities? Whether it would be including exchange bonus or a loyalty bonus or a free gift being given along with the sale, that has also to be seen, which we will discuss in the next session with a comparative table of 105, the draft circular which was never agreed, and this final circular which has been issued as of now. And then we can conclude on various, and we will have certain scenarios. I will see that. If it is possible, I can share it well in advance so that every group member can go through it and we can have a structured and to the point discussion on that part.
That is good, sir. That is welcome, sir. That is welcome.
Venuji, Oniji, for the vote of thanks. Venuji might not be there now. To all the members.
Yeah, again, another wonderful SMS discussion we had today. So thank you all for joining in large numbers and contributing your views on this very litigation prone issue. So we knew that Circular 105, which started off this debate, even though was withdrawn, was something that was much awaited and much represented for by every sector in India. And I'm sure that most of you would have seen issues in your practical scenarios where financial credit notes were being issued. So now some part of this circular would have given relief to most of the cases that you are handling. But we, through this SMS, has seen that there are more areas that we need to be very careful about, or we need to be careful on how to interpret on the impact of the existing agreement or a discount and how it plays a role in defining what is consideration as per 231. So one aspect that again SMS has proved to be is that even though we might have a set view on how to read the circular, while we are discussing en masse, we get a new point of view, or we get a new avenue on which we can further explore and research down the line. So Arpit ji, thank you for sharing those two discussions, which are going to have a big role to play on how to interpret a discount which has happened after the issuance of the original sale, even though it is in a pre-GST era. I'm sure that that will have a very good bearing on what is going to happen in the days to come. And thank you, Ramandeep Si, for taking up the SMS session on a very short notice. I believe Rubja called you last night, but still you said, yeah, you are ready and you are willing to take it up. That's the spirit that we like to see from all the members. So thank you, especially for Ramandeep Ji, for spearheading the session. And thank you all the members for joining and contributing with your views. So see you next Saturday. I believe that we'll continue this discussion on post-supply discount. And I'm sure that this week will bring about new clarifications once the rate changes kick in. And perhaps we'll have a look at that too. Thank you all. Have a good morning.
Thank you. Thank you all.
Thank you all.
Thank you all.
Thank you all.
Thank you. Thank you, Ramandeep ji.
Thank you, sir. Thank you. Thank you all.
Thanks.
Thank you all. Thank